Good morning, everyone. At KBC Group, we recorded a net profit of 868 million euros in the third quarter of 2024. Compared to the result for the previous quarter, our total income benefited from several factors, including higher net interest income, whereby a strong transformation result more than offset the lower income on inflation-linked bonds, increased insurance revenues, supported by commercial actions, and higher net fee and commission income driven by excellent business performance. These items were offset by a decrease in trading and fair value income and the drop in dividend income following its seasonal peak in the second quarter. Our loan portfolio continued to expand, increasing by 1% on the quarter and 5% on the year. Customer deposits, excluding volatile, low-margin short-term deposits at KBC's bank foreign branches, were up 3% on the quarter and 5% on the year. In Belgium, deposits grew by as much as 5% quarter-on-quarter and 8% year-on-year, owing to the successful recuperation of customer funds following the maturity of the Belgian state note issued a year earlier. In fact, thanks to our proactive, multi-phased and multi-product customer offering, the total inflow of core customer money after the state note matured amounted to 6.5 billion euros, outpacing last year's 5.7 billion outflow to the state note by 0.8 billion euros. Operational expenses were up in the quarter under review, but remained perfectly within our full year 2024 guidance. Insurance services expenses were higher, partly as a result of the storms and floods in Central Europe, especially Storm Boris. To date, we are helping some 10,000 customers alleviate the impact of the floods caused by the storm. Next to that, we established a donation fund. Loan loss impairment charges, excluding the reserve for geopolitical and macroeconomic uncertainties, were up on the level recorded in the previous quarter, leading to a credit cost ratio of 16 basis points for the first 9 months of 2024, substantially below the guidance. Including the reserve for geopolitical and macroeconomic uncertainties, the credit cost ratio stood at 10 basis points for the first 9 months of 2024. In the quarter under review, we also booked a one-off 79 million euros gain under the share in results of associated companies and joint ventures. The share of bank and insurance products sold digitally has continued to rise. Based on a selection of core products, around 55% of our banking and 29% of our insurance products were sold through a digital channel, up from 51% and 26% a year ago. And Kate, our personal digital assistant, is making good progress too. To date, over 5 million customers have already used Kate, an increase of no less than 37% on the year earlier figure, while the proportion of cases resolved fully autonomously by Kate continues to improve and now stands at 67% in Belgium and 69% in the Czech Republic. I'm also delighted to add that our successful digitalization and innovation journey regularly receives recognition from external parties. I am particularly proud that just a few weeks ago, the independent international research agency SIA Partners honored us by naming KBC Mobile the best mobile banking app in the world. Our solvency position remains strong, with a fully loaded Common Equity Tier 1 ratio of 15.2% at the end of September 2024. Our liquidity position remained very solid too, as illustrated by an LCR ratio of 159% and an NSFR ratio of 142%. As already announced earlier and fully in line with our general dividend policy, we will pay an interim dividend of €1 per share on 14th of November 2024 as an advance on the total dividend for financial year 2024. I wish to sincerely thank all our employees for their contribution to our group's continued success. I also want to take this opportunity to thank all our customers, shareholders and all other stakeholders for their continued trust and support, and to assure them that we remain committed to being the reference in bank insurance and digitalization in all our home markets.